Hey guys, this is Eric from Mindful Trader. This video is about position sizing, which is one of my favorite topics. Before we dive in, I want to point out the disclaimer URL on the screen. If you could pause the video, type that into your web browser and take a look, that would be great. This is not, to my mind, one of those disclaimers that you might sweep under the rug. This is like a flashing neon sign where it would be really helpful to read it before you join my service or before you consider the information that I share with you. So let's dive in. Position sizing. I use a compound position sizing approach. What does this mean? This means that as my account value goes up, as my account size gets bigger, I take a bigger position size. And the result of this is as my account gets bigger, I'm taking these bigger position sizes, and when I win on those, when I get a profit on those trades, the profit on those trades as it relates to the original account size is getting bigger and bigger. And so there's this compounding growth effect, which is like this magical mathematical phenomenon to me. I just think it's this beautiful thing. So I love doing this. It goes in reverse as well. As your account size goes down when you use a compound position sizing approach, you're taking smaller and smaller position sizes, which I appreciate that as well. So the way, one might ask, how do I go about doing this? The way that I do that is I risk 1% of my account typically on most trades that I do. Now, when I say I risk 1% of my account, I mean if the trade ends up hitting my stop loss and my exit price is the price I set for my stop loss, then my account value will go down by about 1%. So you might be able to see how that is a compound position sizing approach, because basically for any given trade I'm risking 1% of my account balance. So as my account balance grows, I risk 1% of that balance. And that's one effective way to do a compound position sizing approach. So that's what I do, and I will show you in a moment how I go about doing it and how I make it easy for you to do it if you want to follow me. Before I get to that though, I just want to point out that this is just the position sizing approach that I use. You don't have to use this. You can do whatever you want, and you need to consider for yourself what you like to do. I am okay with risk. Everybody's different, right? But I'm okay with risk. I have a decent risk tolerance. For somebody else, they may not want to risk the same amount that I risk, and so they may not want to risk a full 1% amount of their account value on a trade. Or even aside from risk, someone might want to do something more simple. Maybe someone just wants to buy 100 shares of whatever the stock is, and they don't want to kind of have the share size vary by trade. So they might just say it's $100 or 100 shares regardless of the stock. Or they may say I'm going to trade $500 worth of stock no matter what the stock is. You can position size whatever way you want. This is the position sizing approach that I like to take, that to me mathematically is the most appealing. So this is what I like to do, and I will say this is what was done in the back tests. So when I report on the Mindful Trader website what the results were from the back tests that I did of the trading strategies I use, that assumes a compound position sizing approach, and it has a big impact on the overall results. If I had just used a fixed position size throughout that, the results would have been dampened quite a bit, to my mind. So that's why I do this. But again, you are at choice. You can do whatever you want to do. This is just what I do. So I'm going to teach you how I do that. So I'm going to pull onto my screen here the Mindful Trader website. I'm going to go to the My Account page, which is once you log in and once you sign up, you'll have access to this area, and to Eric's Live Positions. So this is where you can see the trades that I make. And as you can see here, this shows like the open trades that I have right now. It shows the ticker symbol, when I opened it, the entry price I had, my profit target, my stop loss, and this other information. And notice that it has a section here that shows position size calculation and position value. The position size calculation, and I mentioned this up here, that's referring to the position size that I would take if I had this account balance. And you would put in whatever your account balance is, whether it's 2,000, oops, or whether it's $25,000 or whatever it is, and you'll notice that these share counts are changing based on what I type in here. So you just can type in your account balance here, and it will show you on this page what the position size is, the share count that I would buy if I had that account balance. So that's, in other words, a way to mimic my position sizing approach if you wanted to. Again, you are at will there. That's your choice. You do not have to do that. That's just giving you information and education about what it is that I would do and how you could go about using a compound position sizing approach. Now, when you enter your account balance here, you want to make sure you know what amount to input. So I have a page here that explains how this works, but basically you want to put in an amount that you are willing to risk. That's really what this comes down to. So in my case, I have an account dedicated to these types of trades, and I've mentioned this before in other parts of the website, but I consider this type of trading that I do here to be the high risk class of trading, especially at the way that I position size. So with my position sizing approach and with this type of trade, to me, this is a high risk trade. So there's safe ways to manage your money, like for example, simply holding cash, or maybe some low risk bonds or something like that. There's maybe medium risk things you could do, like maybe buying shares of an index fund for the stock market and just holding it long term. And then there's this, which I consider to be a high risk class profile of trade. And so I won't take all my funds and put them at risk for this type of trade. That's me. And I recognize everybody is different. And if you're willing to risk it all, you can do that. It's your money and your decision. But I'm making sure it's clear that this is a high risk type of trading approach in general. And so you put here what amount you're willing to risk, which means you could lose that. Of course, with these trades, we're not making these trades to lose the money. We're taking this risk for the potential reward. It's a high risk, high reward setup. That's basically what this is. So when you enter your account balance, you want to make sure you put the amount that you're comfortable risking. And so do you have an account dedicated just to this kind of risk profile of trades? If so, enter the whole account balance. That's what I happen to have. I have one account dedicated just to these trades, and so I just put the entire account balance. But if that's not your case, if you have one account where in that account, let's say it's a brokerage account where you have where you're holding some long-term stocks or ETFs or something like that, and then you also within the same account you have like this little segment of resources you can use for this sort of this higher risk sort of trade, just put that little segment of resources that you're willing to use there. That's what you should put into here. So I'm not saying necessarily put your entire account balance or your whole net worth or anything like that. Put the amount of money you're willing to risk. And there's another thing I want to point out, which is I'm also not saying your available cash balance either. So in my case, I have one account dedicated to this sort of trade, and let's say it has $50,000 in it, and let's say I already have a few trades out and it's using up some of my cash, and the only cash I have left is $25,000. I'm not going to put $25,000 here actually. I'm still going to put $50,000. And the reason is because this balance is simply used to calculate the position size. It's not used to determine how many more positions you can take on. It's used to calculate the position size. And as I mentioned earlier, most of my trades have a 1% risk. And so basically I just need to know, the calculator on this page needs to know 1% of what? 1% of your account balance. So what is your account balance? So whatever that is, just enter it, and then it can calculate the risk and the position size to use. So I hope that helps clear it up. If nothing else, that's what I do. That's how I do it. So you don't have to do it that same way. You can take a totally different approach. My goal with this service is just to educate you on what it is that I do. And that is what I do. So now you know what I do. I want to point out that on this page, here's my open options trades. And you can see here the same thing. It shows, it calculates the position size for that as well. So it's pretty easy, I would say. It's not something that takes a lot of work on your side. If you decide you want to mimic my position sizing approach, it'll just tell it to you right here. So it's really quick and easy to do if you want to do it. Let me see. I'm going to look at my little notepad here to see. Feel like there was something else I needed to say. Show how it works. I needed to show you how it worked. I just did that. That's it. That's all the stuff I had to show you. Thank you so much for watching. If you have questions for me, you can always reach out to me and I will be happy to respond. I try to be pretty quick to respond. My email address is eric, ERIC, at mindfultrader.com. Thanks, guys.